Another Finimize live event. Hello, Finimizers. Welcome to another Finimize live event. My name is Stefan. I'm a global markets analyst here at Finimize, and I'm super happy to host today's event on how the smartest investors spot early crypto gems with our partners, SwissBorg. So first, just some basic housekeeping rules to run through. As you're coming in, please fill up the poll so we can get to know you a bit better. It should appear now. Feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. In terms of format, it's going to be a 15-minute discussion followed by a 15-minute audience Q&A. So, make sure you use the Q&A box to ask a question, not the chat box, the Q&A box. And if you see a question that you like, just upvote it so it moves to the top. And, that way we can get through the most upvoted questions first. All right, so let's get started. Today's session is brought to you in partnership with SwissBorg. If you're not familiar with SwissBorg, they're a leading wealth management platform, empowering its 1 million users to achieve financial freedom through investing in digital assets and decentralized finance. It's engineered in Switzerland and licensed in multiple EU countries, and SwissBorg brings trust and transparency back to crypto. If you'd like to learn more about SwissBorg or explore their offering, you'll find a link in the chat box. Now, of course, no finance event is complete without, a very quick disclaimer. Your capital is at risk. This isn't financial advice. Tax treatment depends on your individual circumstances and may be subject to change. Now, with that out of the way, I'm super pleased to introduce today's guest, Alex Fazel, Chief Partnerships Officer at SwissBorg. Alex Fazel is a TED speaker, broadcaster, and blockchain educator whose work at SwissBorg has redefined accessibility and transparency in the Web3 investment space. A previous host of the popular YouTube channel Crypto Nights and a featured speaker on platforms like CNBC and Coindesk, Alex is a true advocate for the transformative power of crypto. Alex, it's a real pleasure to have you with us. How are you doing today?
I'm doing great, Stefan. Thank you so much for having me. And Finimizers, it's a pleasure to be with you today.
Awesome. We're all excited. So let's dive in. Okay. What's the first thing you look at when evaluating a new crypto project? And what's the first red flag that makes you walk away?
Yeah, this is one of my favorite questions, Stefan, because it could be applied to primary markets. So when you're investing in a project that has not launched a token yet, but it can also be applied to the secondary market. So tokens that are already listed and liquid. And I tell a lot of people, guys, that the absolute tooling or framework to really succeed in investing in early stage projects can be defined as the 8 T's, as in the letter T. And the most important T out of all these T's, I'll go through the T's once and then we can talk about the most important ones. But the first T stands for team. The second T stands for treasury. The third T stands for tech. The fourth T for token and its tokenomics and utilities, use cases. The fifth T is the theme and the trend. The sixth T is the traction. And if you're looking at primary markets, so investing like an angel or in a VC, I would add 2 more T's, which is the timing of the market, of the cycle, and also the terms and conditions. But going back to the first 6 T's, which apply to the secondary market, Stefan, because that's available to everyone, right? When you just identify potentially a micro cap or a small cap or an early stage project, the first T, the team, is the most important of all. And the reason why it's the most important is it's because the team is going to deliver the technology for you. They're going to try to solve a problem. They're going to have to do the marketing. They're going to have to raise the funds. And a really strong team, what I think is the most important criteria for any startup, and I can say that with great confidence because we went from 4 employees to nearly 300 employees in less than 5 years. So we know how to scale a company. We see what you need, and we've made enough mistakes to understand what the most important factor is, and that is adaptability. And that's, Stefan, the ability to adapt, to pivot, to change your decision, to change your trajectory in order to respond to what the market truly needs is an absolute must criteria for all companies. And the most common criteria for the successful CEOs in the Fortune 500 also has to be adaptability and not intelligence or are not experienced. It's really adaptability is the most important component. And then the second component, when you guys are investing in these projects, obviously treasury, we talked about the second T, having money to survive, because in Web3, the problem is, it sounds crazy, right? But not a lot of them actually have revenue models, because it's very, very early stage. And if they don't have revenue models, it usually takes, for everyone who's looking out here, it takes about 1 year to develop a product, an average. So after maybe a year and a half, you start generating revenues. And then hopefully, if you're successful, within 2 to 3 years, you're profitable, right? Ideally, in average, I think it's around 3 years where you're profitable. And then that helps you scale to 5, 6+ years like us. So I think, Stefan, the second most important T is treasury, because it's going to take them a while to build a product that really can challenge Web 2 and that can also challenge Web 3 in order to create a revenue model. So it's important to know their treasury and their runway. So it's not just hype and marketing.
So, we've seen countless projects really launch with a lot of fanfare and then fade. What are the key ingredients in your view that really can help a crypto project drive early adoption and keep users engaged?
Yeah, I think one of the biggest mistakes that most startups make is the fact that they don't get enough feedback. There is a huge lesson learned from a book called The Lean Startup. And essentially, they do lots of A/B testing, and they get a lot of focus groups for people to understand truly if people would adopt their product. So the mistakes they make happens even before fundraising, because they're so biased, and you have what you call actually the founder bias, which they think they're going to change the world, and they need to be a little bit humbled and realize that feedback and validating every single step of your products is absolutely key to being a success. So if you guys are evaluating crypto projects out there and you see a project that is not listening to your advice, especially as a community member, because the difference for me when it comes to Web 2 and Web 3 is you guys in Web 2, you're probably customers, right? Or users. But in Web 3, you can become a community member. So the difference here is that being a part of the community, you have direct access to the founding members like myself or my brother, the CEO. We have people walking into our office just to ask for a cap or a SwissBorg T-shirt or a hoodie. So the vibrations are very different, and I think it's important for the projects to show that they're open-minded, especially to feedback. Stefan, if that makes sense.
It does make sense. In crypto, I'm always amazed. There's just so many interesting things going on. And right now, DeFi, real world assets, layer twos. So there's a lot of exciting stuff going on, but there's also a lot of noise. Where do you think the next wave of breakout projects will come from? And in particular, let's make it practical and actionable. Is there one trend or one corner of the market perhaps that you're personally most excited about right now?
Well, I think the biggest step, if we're talking about how much AUM, assets under management, how much total value locked, and we're talking about the liquidity coming from traditional finance, I think a very obvious one, Stefan, is for us to have on-chain equity markets and on-chain stocks. And all these things, everything you see in traditional finance will be on-chain in the future. And the reason why is because it's modular. You can have setups, for example, for, let's say you want to buy SpaceX equity, and you can set it up on chain with the modular DeFi, and you can actually earn some sort of system that could be like dividends, even though SpaceX as a company may not offer dividends. You can have setups through these Legos on DeFi where you could actually earn APY through providing liquidity. And I just think that not only the equity world and stock market world will be more efficient on chain, will be more transparent. And now the technology, as you said, with the layer zeros and ones that are scaling at the speed of light, like now they're faster than the Visa network. So the Visa network can accommodate apparently up to 25,000 transactions per second. There are some blockchains on their mainnet that can go faster than the Visa network. So it's just a matter of time. That's a little bit longer term, Stefan. In the shorter term, I would say AI-fi. You can't really trust some of these AI applications because they steal your data. You don't know who's behind it. So I think there's a real use case where the crossroads between AI and decentralized finance for the transparency and trust element. And then, of course, DeFi, which we just talked about, and real world assets and all of the traditional finance coming on chain. It's going to be huge.
So when we were chatting just before the event started, you mentioned that one massively overlooked factor is strategy. How do you actually go about investing in those? How do you manage your positions, etc. So the floor is yours. What's really important in terms of strategy?
Yeah, absolutely. So there are two strategies that I would love to recommend. And if any of you would like to try within the SwissBorg app, please feel free to try and share your feedback with us. But I think right now, Stefan, it's very likely that, even if we're worst case scenario, let's say we enter a recession, which, if we have 2 periods of zero growth and, the economy flattens, we all know that everything is cyclical. So I'm very, very bullish the crypto markets and stock markets. And I think by the end of this year, we're going to have some major triggers, and by the midterm next year, as Donald Trump wants to sustain having a Republican Senate and keeping the House, he has a very strong deadline in November 26th. So he's going to have to validate some really strong numbers for people to want to keep the current Senate. So that deadline is very important, Stefan, because the president and his administration have to deliver. So I think you guys, first of all, even despite all the tariff BS that we're seeing out there and all the noise, just look at the basic macro indicators. Don't get lost in some of this stuff. And the market will resume. And the two strategies that I recommend, Stefan, is either number one, you buy a bundle. And you mentioned earlier, Stefan, layer 0, layer 1, layer 2 infrastructure. I think that's probably the best bundle you should start with, because I wouldn't invest in the early stage crypto projects as of today. My risk appetite is not there personally. And so, once again, this is not financial advice. Please do your own research. But I think it's very important that you adjust your risk appetite according to the market stages. And right now, it's good to stay in the top 100, top 200 tokens by market cap. And I would actually go, just as you said, Stefan, focusing on layer 0, 1, 2, especially the new generation blockchains, which we call the fourth generation of blockchains. So there are amazing projects out there. There's Monad that is launching soon. There's a project called Movement. There's Avalanche, which is a third generation blockchain. There's Solana, which is a third generation blockchain. There's Berachain, which is a fourth generation blockchain. And the reason why I would choose them is because they have lots of money. A lot of these projects have raised over $100 million. So they're not going to go bankrupt anytime soon. And they have lots of money to grant to other projects building on top. And they have the best technology. So I would buy a bundle, best blockchains if you use SwissBorg. And the second one, Stefan, is dollar cost averaging. I know a lot of you out there are probably rolling your eyes. Oh, dollar cost averaging. What a newbie strategy to invest. But the thing is, it's like dollar cost averaging is effective even if you buy the top of the market. After half a cycle, if you bought the top of Bitcoin, $64,000 in the previous cycle, only a year and a half later, you would already be ROI positive. A year and a half, you would already be at 10, 20, 30%, depending on how you spread out your dollar cost averaging. But for everyone watching here, and if this is the first time you hear what dollar cost averaging is, this is a concept that came from Benjamin Graham, who wrote The Intelligent Investor, and who happens to be Warren Buffett's mentor, and probably the most mentioned financial book of all time. A lot of people say it's the Bible of finance. He's the guy who came up with the concept of the value investor. And he says that dollar cost averaging means investing the same number of British pound or dollars each month. It could be monthly, it could be bi-monthly, it could be quarterly, especially when the market is low, like today, to reduce the average cost of your asset. And all of the top financial gurus have validated dollar cost averaging, whether it's Charles Schwab, whether it's Warren Buffett, whether it's Mr. Vanguard, whether it's Ray Dalio. And I think if you guys don't want to look at charts, 7 to 10 hours a day, it's the best strategy. And me personally, Stefan, I'm dollar cost averaging on a bi-monthly basis, because I think we're going to go through maybe flat or highly volatile markets, maybe for the next 3 to 6 months. And then as soon as the market starts recovering, I will reduce my dollar cost averaging. So I think right now, the timing and the strategy, there's a lot of money to be made.
Awesome. Thank you so much, Alex. That was super clear. Okay, so I think it's time now to run this over to you all tuning in. So, what questions do you have for Alex? Please share them in the Q&A box and vote for the questions you want to see answered first. Okay, first question I see. Let me see most of the votes. Do you have any coins you'd advise looking into just now based on your criteria?
Putting me on the spot. I do not take responsibility if these coins are volatile, but essentially, if we're going just through the criteria of the best tech, so once again, the layer 0, 1, 2s that have built recently, either third or fourth generation, because like Ethereum, for instance, is becoming an on-chain commercial bank, but they will never have the throughput and the transactional level that institutions need. So if all of a sudden, let's say JP Morgan wanted to use a chain, they could never trade on Ethereum because the technology is just not fast enough and it's too costly. Because the institutions, they need to execute in milliseconds, right? In a fraction of a second to get the price that they want. So for those purposes, guys, I recommend Generation 3, Generation 4 blockchains. So I prefer Solana over Ethereum. There are many reasons for that. First of all, the technology is better. The community better branding. It resembles, if Ethereum was like Linux, Solana feels like Apple. So they have really good branding. They have that cool vibe to it. A lot of people have no clue what they're doing at the conference, but they just think it's cool. So I think Solana is a better bet than Ethereum. I like Sui. I think Sui has great tech. I've met the team fundamentally. They have over $100 million in it's a fourth generation blockchain. SUI, I think it's very, very good. I've been dollar cost averaging at under $2. So I think between $1.8 to $2.2, it's a no brainer. I also like Avalanche. I think Avalanche is really scaling their technology really fast. They have some adoption. If you guys like the BNB coin, there's the BNB coin. And then there are other projects like Movement or Bera Chain, which are still young, but once again, have a lot of money and good tech.
Now, we couldn't talk about crypto without talking about Bitcoin. So the next question is, what's your long-term thesis on Bitcoin?
Oh my God, I am super bullish Bitcoin. I would never sell a single Bitcoin just because we're seeing right now what we're doing with quantitative easing, with the lack of supply. People talk about gold being a scarce commodity, which is true, and it has a fantastic historical performance. It's been around for ages, and it had, I think, correct me if I'm wrong, Stefan, maybe 60 of data, maybe 70, like since the 40s or 50s. But Bitcoin is truly the only asset that has absolute scarcity. In China, we're finding new gold every day. We're just increasing the supply, by 1 to 2% every year. So it doesn't have that finite supply. And I also think that the track record now, since to really show. Now, I just want to say Bitcoin, obviously, when the last token, which is in 100 years from now, so all you investors, I don't think will be alive. Elon can invent miracle products. But I'm not bullish, Stefan, once getting closer to the minted, because I don't know how we're going to sustain the if we're thinking.
Alex, you're cutting off a little bit. Your microphone is cutting off a little bit. I don't know if some cable has been disconnected or yeah.
Is it good now?
Let's see. Hopefully it's better now. Sorry.
Okay, fantastic. So I was just saying, like, if we're talking about a 10-year horizon, Stefan, Bitcoin is an absolute no-brainer. I would say even maybe 20 years, as long as they can work on the quantum proof hacking. But at least 10 years, I'm very confident to say that I don't think it's worth selling any of your Bitcoin. Just buying at the lows when the days where you're shocked. By the way, Stefan, one of the triggers for my dollar cost averaging, because I'm trying to do smart DCAing, is I always add even more to my dollar cost averaging when I feel shocked. When I look at the charts and I see blood and I'm like, oh, and whenever I have that feeling, I'm like, okay, I just had a shocked feeling. Now it's time to add to my dollar cost averaging. But Bitcoin for the next 10, possibly 20 years, I have absolutely zero doubt.
Just out of curiosity, do you have any specific indicators that you use for, there's blood in the street, now it's time to buy a bit more, and potentially dollar average? Any specific indicator you could share?
Yeah, absolutely. There's the hash rate to show kind of the health of the people who are mining the network, because if the miners are continuing to grow despite the price, then that's showing that people want to support, and secure the network. So hash rate is a great one. Transactions online, how many transactions? There's some metrics where you can see the whales. Are the whales accumulating? There's some that's the beauty of DeFi and blockchain, Stefan, right? Is everything is on chain. On the contrary of the stock market, where you have to wait for an annual report, right? Maybe sometimes you can't even trust those reports because they've been cooked a little bit. So I think that's the difference. And say, like, for Bitcoin, if I, by the way, no one's going to be able to time the market perfectly. So Warren Buffett says something that I really understood after getting wrecked a few times, that it's not about timing the market, it's the time you are in the market. So I think that's very important. But the good thing about, once again, blockchain, guys, is that if you're in doubt, always verify on chain. So it's much easier to fight fear than greed. Greed is very, because we're entering new horizons, new waters, right?
It's cutting off a little bit again. I don't know if maybe you can switch to your laptop's microphone, worst case.
Okay, yeah, I'll change it right now. Can you hear me?
Yeah.
I was just saying it's easier to fight, for me at least, because we have all these on-chain statistics. It's easier to fight fear than greed, because greed, you're entering new waters, you're entering new price discovery, and the greed is just thinking, oh, what if it goes another 2x or another 3x? So I think when the markets are really in the red, you can go and check Bitcoin's on-chain statistics. Just type Bitcoin on-chain stats, and you'll find the top 3 will give you all the statistics you need to build that trust and not be afraid of dollar cost averaging.
Awesome. Thanks a lot, Alex. Okay, let's take a bit of a step back, and maybe that's a question that will matter for a lot of Finimizers, which is really asset allocation. So how do you think about crypto as a percentage of your asset allocation in a balanced portfolio? So
the concept of risk, to me, is very, very subjective. I know people who are 99% into crypto and they're very comfortable. I know people who have 1% of their portfolio into crypto and they're uncomfortable. So I really believe that, if you guys are just starting, just having 1 to 2% of your portfolio to start with, I really believe in doing things gradually and pacing yourself in life, and not, getting burnt or going too fast, and hurting yourself. So for those who are just starting 1-2%, if you already have 1 to 2 to 3%, I would encourage you to go up to 10% of your total portfolio, because once again, if that goes to 0, that it's not going to kill you. It will hurt for the short term, and it's very unlikely that it goes to 0 if you balance your risk. So but most of the crypto people that I know, Stefan, they have more than half, 50%, 60%, 70%. Currently, for me, I'm trying to aim for, currently I'm roughly around 50-50, but in the past 2 months alone, I went maybe from 30% of my portfolio to 50%. I added 20% since the market started correcting, because and I hopefully, before the market rallies, I'll be exposed 70-30, 70% into crypto, 30%. Knowing that, by the way, the 30%, I think it's very important that it covers at least 1 year of all of your expenses, including if I lost my job, including if really the worst case scenario happens. So I don't know. Call me crazy, Stefan, but I think those are good ratios.
I'd call you very bullish.
I'm very bullish. Yes.
What do you think will be the major shifts in regulation for crypto over the coming years? And do you see this as necessary for global adoption and reduction of risk corruption? And please, everyone, just make sure you upvote the questions, because we will only have time for 1 or 2 more.
Yeah, so I'm definitely pro regulations, and that is a little bit anti-liberal, the anti-liberal mentality, right? Because a lot of the first people who joined this Bitcoin space, they're mostly libertarians, right? They're people who don't want government interference. They want freedom, and they have very strong principles around these concepts. But for me, I think regulation is very important. We saw what happened recently with Bybit and the hack. And that's what happens when you have unregulated exchanges, unfortunately, Stefan. So I don't think we should be as regulated as the banks, as having a banking license, which literally every single move needs to be reported, and it gives you very, very little space for innovation. So that'd be too far. But SwissBorg, we're fully regulated in France. We're regulated in Estonia. We've documented and applied for the MiCA. We're regulated in the UK, obviously under the FCA, under an umbrella. And the beauty about being regulated, Stefan, is that first of all, in most cases, you're not allowed to hold custody, right? So you need either a fintech license or a brokerage license to hold custody. So within the SwissBorg situation, relative to Binance or Bybit, if they get hacked, your funds are gone, and they're controlling the custody. And I think, Stefan, holding custody of the assets is something that we don't want. And so we use a third party, which is Fireblocks. They're the most reputable custodian in the world, with MPC technology. So it's very important that all of you out there, if you're using a centralized exchange and the exchange holds your custody, plus they're unregulated, then I would not trust them at all. I wouldn't touch them with a 10-foot pole. So I think regulations are important, Stefan, believe it or not, because we see also all the scams that we have in DeFi and how problematic it is to, to circumvent these rules. So, yeah, I hope we find the balance between both worlds of not being overly regulated, but not being too free either.
Yeah, fully agree on regulation. Okay, what's a mistake you made early in your crypto investing journey that reshaped your approach?
Taking profits. Once again, fighting the greed. And, as much as I'm highly encouraging everyone here to dollar cost average, because I am so confident. This is, by the way, what I'm sharing with you today is what I would share with my mother, with my cousins, with my uncles, with my aunts, with my best friends back home. I've been contacting them for the past month and a half. They've always asked me about Bitcoin when it's all over the news and it's reached, they're going to call me when Bitcoin's going to be at 150K, and it's going to be too late again. So I think that dollar cost averaging into your position, but also, Stefan, dollars cost average out of your position. So it's very important that if you have a target, and for me, the target for Bitcoin will be the way the markets work, by the way, this is a very, very important component. So do you remember earlier, Stefan, when I said your risk appetite needs to match the cycle of the market? So what happens is right now you want to dollar cost average in the majors, right? Because it's still a highly risky market. What we're having in the trade wars with China, never know where it can go. So you dollar cost average in the large caps. And then as the market goes up and starts rallying and confirming a bull trend, then you can go down in risk. You can go down from the large caps to the medium caps, the small caps. And if you're very knowledgeable and you've read the white papers and you understand what you're investing in, you can go into the micro caps. So the micro caps are tokens that have less than $200 million fully diluted valuations. But the one thing that's important to find is once you go down and the market is hitting the euphoria stages and you're seeing crazy gains, what I didn't do is you need to go back up. So just like when you're diving, the deeper you dive, the more risk you're taking because you may run out of breath. You have to swim back up. So if you go down to the micro caps, don't forget to go back up to Bitcoin at the end of the markets or when it's becoming too crazy, or just go into British pound or gold or buy real estate, your favorite car, your favorite watch, whatever collectible, doesn't matter. But I think it's very important when you dollar cost average in, dollar cost average out, so that you can enjoy the bear markets with great happiness.
With great happiness. I like that. Last question. How do you differentiate between a true early gem and a project that just has good marketing hype? And maybe in 2 minutes.
That's a great question. So for the technology, to be very honest, everyone, I will just look at the traction. When we're going back to the T's, I'll just look at the traction, because even if the technology is not necessarily the best, if you rely on an engineer, Stefan, and he says this is the best tech in the world, but there's no adoption, I'm sorry for my French, but I don't give a shit about that, right? Like, I want to see usage. And that's really all that matters, right? This concept of evaluating projects under the Metcalfe's law, which was the first framework to measure Facebook's value, because they didn't really have a revenue model, but they're just growing the network, is really to just understand the usage, Stefan. I wouldn't trust the engineers if they're overly enthusiastic, like they're saying, "Wow, this is the best tech in the world," which is worth asking, by the way, to these people. But still verify the usage, because great tech without users is like a super beautiful shopping mall in the middle of a desert where no one's actually visiting. So for me, usage is the most important component. It's the T for traction.
Amazing. Alex, I've learned so much in this half hour. I'm sure our Finimizers have too. So thank you so much for the chat. As you leave the event today, everyone, please, a pop-up survey will appear on your screen. Just take a few minutes to let us know what topics you're interested in, and just give the feedback. Alex, thank you so much again. Thanks everyone for joining. Hopefully, we will see you very soon at a next event. Thanks. Have a good day.
Thank you so
Bye-bye.
much for having me, Finimizers.